Wonderful. Thanks so much. Good morning, everyone. I'm Alicia Cordes Mayo. I'm the new Deputy Communications Director working with Jen Gates. As a reminder, really happy to have all of you on the call. If you could please mute yourself to mitigate any echoes, that would be really helpful. You can type your question in chat and we'll be sure to take those questions at the end. And if you have any technical difficulties, please do email me. So with that, I'll hand it over to Commissioner Grove.
Great, thanks Alicia. Good to see everybody. Happy to be with you today. Steve Grove here, Commissioner of DEED, and excited to walk through our latest jobs report for December. But before we do that, I wanted to introduce a new face here to all the journalists who are with us today, and that is our new Director of Research for DEED's Labor Market Information Office, Angelina Nguyen. She is going to be our new Director for Labor Market Information and all of our research work. We are thrilled to have her here at DEED. She brings a strong background in various state agencies and has a great research history as well. She's joining us from the Department of Labor and Industry, where she worked to lead a team focused on labor market analysis there. And she's also been the liaison to the Fed Bureau of Labor Statistics before. Also worked at the Department of Human Services in its Child Support Division, and has been deeply involved in the Council on Asian Pacific Minnesotans as well, focused on highlighting to the legislature issues of importance for the Asian Pacific community here in Minnesota too. So Angelina, welcome. We're thrilled to have you here at DEED and wanted to just take this moment to allow you to say hello to our friends in the press as we go forward with your leadership here at the agency.
Thank you, Commissioner. Hi, everyone. It's my second day, so I'm learning and watching, and it's very exciting. And I look forward to working with all of you.
Well, welcoming, and of course, we want to thank Orion Casal, who's been just a phenomenal interim director of the Labor Market Information Office. She's been such a thoughtful leader for us, and you all have gotten to know her and know her so well for her years of leadership at the agency, and she'll continue on in her role as the deputy director of the division, just providing such important research and analysis for our state. So a big thank you to Orion for her work here, and of course, we'll dive into the numbers now and share you the latest information, and excited to take your questions as well. I'm sure you've all seen the release just went out a little bit ago. As you saw, we posted an unemployment rate that ticked down 0.2% to 3.1%, lowest since it's been since 2019, far before the pandemic. And the labor force participation rate remains steady. It's at 67.7%. But again, these numbers this month show what we've seen a lot over the past year and a half, just the volatility that we've kind of come to expect in a pandemic as it relates to job recovery. We were down 2,000 jobs in December, a drop of about 0.1%. The U.S., for context, was up 0.1%, but again, kind of an anemic December for the nation's economy. That was reflected here in Minnesota as well. It was interesting, though, to see that the jobs from November, which is such a blockbuster month for us, were revised up even further. So 5,000 more jobs in December than we had, or sorry, in November than we had reported. So 13,600 jobs were gained in November. It was just a huge month for Minnesota. It kind of cooled off in December, as you see, but those upward revisions were really good to see. Most notably, those upward revisions in November, we saw 2,300 additional jobs in trade, transportation, utilities, and 1,700 more jobs than we had previously calculated in leisure and hospitality in November. So a stronger November than we had originally reported, but a December that showed a downward tick in job growth, which again speaks to that volatility we've sort of come to expect in a pandemic as we come back from this. Getting to some of the specific sectors, we saw manufacturing go down 900 in December, still up 14,000 over the year, a 4.6% growth rate in manufacturing, but that downtick did happen in December. Leisure and hospitality was down 600 jobs in December as well. Interesting to point out, though, that loss was entirely in arts and entertainment, the sort of large gatherings that maybe have tailed off slightly given the growth of Omicron. Food service actually added 600 jobs in December. So kind of the restaurants continued to grow, and the larger venues saw a downward trend in December. Government was up 200 jobs. Construction was up 300 jobs in December. We saw education and health services up 1,800 jobs in December, which is good news. So big picture, though, as we all know, we lost 416,300 jobs from February through April of 2020, that initial dip at the start of the pandemic. And we've now gained back about 74% of those jobs, about 307,400 of them. In the private sectors, we gained back about 77% of those jobs. So we're still projecting that by the end of this year, we'll have regained those 416,300 jobs. And that's what our analysis here at DEED and the national analysis is predicting. We have to keep moving forward, though, and hire and make an environment here in Minnesota where that growth is possible. Over the year on job growth, we are up 6.2%. So if you compare December of last year to December of this year, we have gained 6.2% jobs in the state. That far outpaces the nation. The U.S. over the year growth rate is 4.6%. So we're at about 2% higher clip over the year on job growth than the country. So we're glad to see that continue to be the case. Leisure and hospitality jobs continue to outpace those of the U.S. in all comparable industries. The same is true for construction and for manufacturing. So the growth in those really critical industries continues. And then something that I know you're all writing about and examining closely is that wage data and inflation data. We continue to see wages go up. They are up 6.1% since December of 2019. Actually, sorry, that's, let me correct myself, 6.1% up this year. And since December of 2019, they're up 9.8%. So almost a 10% bump in wages on the 2-year mark, which is really impressive to see. But of course, inflation is eating up a lot of that. We see the CPI inflation index, and again, that's a national number, rose 7% over the year. And so that's outpacing the over the year wage growth, not the over the 2-year wage growth, but consumers are feeling that. We know that's challenging for both employers and workers right now, even though the wage gains are there too. So that remains a challenge. As you look at wage growth, though, one of the things we saw this month that I think is worth highlighting in December is that the average wage for production workers in nursing residential care facilities, a really critical sector of our economy, as we all know, rose 12.4% over the year we saw in December. So those average wages are now at $21.13 an hour. Those are some of the jobs we need the most in our economy right now. Just a huge bump in that sector for wages that we hadn't really seen before, and the December numbers really highlighted that. And I think it's just a testament to the ways in which those facilities are needing to raise wages to get workers at a really critical time for nursing residential care facilities. So wanted to highlight that in particular. Our labor force does continue to grow. I mentioned before, our labor force participation rate is held steady at 67.7%. But the labor force does continue to grow. In December, it was by about 240 people. But over the year now, since the last year, it's gained by about 5,000 people. So we are bringing more people back into our workforce. Certainly not at the rate that employers need right now. So that remains a major priority of ours. But we are seeing growth there that's important to highlight. And then we continue to highlight some of the demographic specifics in the data. We can get into the more details as we move to Orion here in a moment. But the disparities between Black and white unemployment rates remain pretty stunning. We see about 11.1% unemployment rate for on a 12-month rolling average in December for Blacks, while the white rate is about 5.4%. We are seeing the Black labor force participation rate go up, but that unemployment rate remains a challenge for the Black community in our state, and something that DEED is very focused on in all of our programs and in our work. So a lot more to share here in the slides to come. I think, after a really strong month in November, you saw a bit of a cool off in December. We know that the growth of Omicron has been, or Omicron has been a major factor both in the U.S. and here in Minnesota. Inflation remains a challenge, and when I talk to employers every day, it's supply chain as well. These trend lines we're seeing nationally is certainly playing out here in Minnesota. But some good news too is our growth largely is outpacing the country, which is important. We want to continue to be on the front edge of this economic recovery. And we are seeing workers and employers find new ways in this new normal to make it work. One of the things we're seeing a lot of is employers making better use of the workforce they do have. We've seen involuntary part-time employment. In other words, folks who wish they were full-time but are part-time because of the way the contracts or the employers are hiring. That number fell again in December by 500 people. So on a 12-month moving average basis, it's only at 34,900. That's good news. That basically means that employers are turning more part-timers into full-timers as the labor shortage continues to be a factor for workers. And we're seeing the number of longer-term unemployed go down as well. For the fourth straight month in December, that number dipped, which is something that's really a positive sign for our economy too. So kind of a mixed report overall. Some things are going good. Some things we saw kind of a return to some of the more volatile trends. And I think with that, I'll turn it to Oriane for some more detail, and then eager to answer your questions.
Thanks, Commissioner. You can advance the slide, Alicia. So just to review some of the numbers, the unemployment rate fell 0.2 to 3.1% in December. That is the lowest rate that we saw in 2019. If you remember, the unemployment rate was 3.1% for maybe 4 or 5 months in 2019. We lost 2,000 jobs on a seasonally adjusted basis. That's the first decline in 2021 on a seasonally adjusted basis. Over the course of 2021, from January to December, we made, unfortunately, no gains in the labor force participation rate, which is at 67.7% now. It started the year at 67.9%, but we did add just around 5,000 workers to our labor force. And so we are definitely going into 2022 with a very tight labor market. As the commissioner mentioned, involuntary part-time is down quite. It just keeps dropping and dropping. So people are finding full-time jobs, and employers are using their workforces more efficiently. You can advance the slide. This graph adds together the unemployment rate and the change in the labor force participation rate from prior to the pandemic recession, so from February 2020. This represents the total share of workers over this period who are either actively seeking work or who would have been expected to be working or looking for work if it wasn't for the impact of the pandemic. These adjusted unemployment rates are calculated from 12-month moving averages from the current population survey data. In December, the unemployment rate for Black workers in Minnesota rose to 6.2%, while the labor force participation rate dropped slightly to 66.4%. The unemployment rate for Hispanic workers rose to 4.7%, with labor force participation also up to 78.3%. The unemployment rate for white workers ticked down to 3.6%. While their labor force participation rate ticked up to 68.1%. You can advance the slide. So this is the same analysis for female and male workers in Minnesota. Women's unemployment rate dropped to 4%, while their labor force participation rate ticked down to 63.6%, and men's unemployment rate remained steady at 3.7%, while their labor force participation rate rose a bit to 71.8%. So in December, the drop in labor force participation from prior to the pandemic remained greater for women than for men, so remained greater compared to November. And a couple previous months. You can advance the slide. So this is the over the year change by industry super sector. Minnesota gained 168,000 payroll jobs in December over the year. That's an increase of 6.2%, with the private sector up 163,500 jobs, or 7.1% over the year. These gains put total non-farm employment 109,100 jobs short of December 2019 prior to the pandemic, and 89,300 jobs short in the private sector. So this slide shows the over the year change in jobs by super sector. So you can, if you recall December 2020, that was the second employment trough during the pandemic. So the comparison to this month, the comparison for this month is to a weak month the year before. So this month, only financial activities and mining and logging showed over the year declines. Financial activity losses were entirely in the finance and insurance components, while the real estate and rental and leasing component added close to 300 jobs over the year. On the other hand, construction, manufacturing, professional and business services, leisure and hospitality, and now also other services show stronger growth in Minnesota than at the national level. So looking at some of the sectors, construction remains strong in every published industry, with heavy and civil engineering construction up 19.4% and construction of buildings up 10.9%. Manufacturing employers did shed 900 jobs in December, both in durable and non-durable goods, but durable goods manufacturing grew 11,000 jobs or 5.8% over the year, with strength in transportation equipment and wood product manufacturing. Professional and business services lost 1,800 jobs in December, mostly in professional, scientific, and technical services. Management of companies added 1,100 jobs, but as you'll remember, that sector is doing well over the year. As the commissioner mentioned, education and health services added 1,800 jobs, split evenly between the private sector, educational services sector and the healthcare and social services sector in December. That's on a seasonally adjusted basis. So over the year, healthcare and social assistance is down 3,000 jobs, with nursing and residential care facilities down 5,000 jobs over the year. Leisure and hospitality continued to add jobs in accommodation and food services in December, but lost 1,600 jobs in arts, entertainment, and recreation on a seasonally adjusted basis. And other services added 400 jobs in December, the third consecutive month of gains for the sector. And you can advance the slide. So looking at the recovery since the end of, since February 2020, or compared to February 2020, a couple sectors stand out. Construction, professional, scientific, and technical services, local government, and also as of this month, private educational services and transportation, warehousing, and utilities are all above pre-pandemic levels of employment based on seasonally adjusted numbers. Manufacturing, arts, entertainment, and recreation both lost some ground in December, while accommodations and food services, retail, trade, and other services gained some ground. But all of these industries have regained between 78% and 86% of the jobs that they lost in early 2020. Information, financial activities, mining and logging, state and federal government have continued to lose jobs during this period since February 2020. And healthcare and social assistance has only recovered 43% of the jobs lost during early 2020 based on these seasonally adjusted numbers. And I think we're going to take questions now.
Great. Do we have any questions? Just a reminder to please take yourself off of mute to ask a question. Kavita, please.
Yeah, hi guys. Thanks for walking us through these numbers. A couple questions. First, to what extent do you think Omicron might be playing a role in the 2,000 jobs lost in December? And second, this is one of those weird months where the two surveys are showing completely opposite trends. I know we've had that before. So I guess my sense is that, that the employer survey is a little bit more reliable, right? Because it's a larger survey than the household survey. So do you put a little bit more weight into the jobs numbers, or given like all the adjustments and, you know, some of the unreliability of that survey right now, is that also up for, I don't know, how do you make sense, and like which survey are you paying more attention to?
Oriana, why don't I take the first question? You can take the second one. Great question, Kavita. I think Omicron is certainly affecting employers across the country. I hear it from employers in Minnesota every week. I think the effects on the workforce of Omicron in particular are challenging right now, given that folks are having to be out. It just creates additional uncertainty. It creates different kinds of consumer demand. So we are hearing from people that it is a factor. I don't think it's the only factor. I mean, I think I'm hearing a lot on supply chain issues as well. We also just see that November was such a huge month that December might have just been kind of a natural cool-off moment. Hard to say, but all those national trend lines you're all writing about and analyzing, I think, are at play here in Minnesota too. Inflation is a component of this. Challenges continue on the childcare front, and with schools having to close because of Omicron, parents having to stay home and take care of kids, and so some of that hiring sluggishness could be a part of that. So we think it's a multitude of factors. It's never just one thing, but the virus clearly affects every part of our economy, and it's just a reminder that our economy's rebound and recovery and regrowth is tied to the health situation in our state. So, Oriana, I'll kick it over to you for the good question on the data front.
Yeah, and just to add on to the Omicron conversation, arts, entertainment, and recreation lost 1,600 jobs in December, and that's, somewhat clearly related to people canceling events and also just not wanting to attend large group events during this period. In terms of which survey is better, I really, we've had this conversation before. Certainly the employment survey is larger. In any given month, it's really hard to know which one's performing better. But I think that's why we have to look at a longer period than just 1 month, because really these numbers all build on each other month over month.
I'll chime in with one more if nobody else has anything. Commissioner, you mentioned that you guys are forecasting all of these jobs to be recovered by the end of this year. So are you guys forecasting that labor force participation will be back up to like pre-pandemic levels too? Because that seems like the only way that you can get all those jobs back is if you have these people coming off the sidelines, or
Yeah. Orion can speak a little bit to some of the forecasting specifics. I will just say, we base this both on our deed analysis, but also on the IHS market report. And it does show by the end of Q4 of this year a recovery in jobs. We do not predict labor force participation rate to make that same type of recovery. And even before the pandemic, our economists had predicted that it was going to be going down in the coming years, given some of the demographic trends that we saw. And those were accelerated by a huge amount of retirements during the pandemic that happened, I think, a little bit faster than they otherwise would have. I think as we talked about here before, it's a little bit different than the last recession that we had during the Great Recession, where not only was there challenges in the economy, but the stock portfolios of many folks who were considering retirement didn't look so great. This time, you've got the stock market booming. And so if you're thinking about retiring and your portfolio is in good shape, it's a more attractive thing to do versus kind of hanging on for a few more years to make up some of what you lost in a dip. So I think those are some of the factors here. But Orion, you'll have more nuanced thoughts to share on this as well. So I'll turn it to you.
Well, certainly we're, hoping to make some progress in the size of the labor force over the next year. Looking at national numbers, we don't have the data at the state level, but looking at national numbers, about 1/3 of those who have dropped out are of that prime working age population, and are anticipating and are saying that they plan to come back into the labor force. The other 2/3 are 55 and over. Likely just natural retirements or somewhat accelerated retirements. Now, some of those people, once they feel safe, may come back into the labor force, at least part-time, but but that's certainly not going to be the bulk of who we expect to come back. So in terms of can we actually recover all these jobs based on a very slow growing labor force? Well, the unemployment rate is, anticipated to continue to decrease. So there's some workers there. And there, will certainly be some growth in the size of the labor force over the next year.
Brian?
Hey, Commissioner, slightly off topic, but do you have the latest figure on the health of the UI trust fund? Has it changed much? Are people drawing less on it? Is it kind of bouncing back maybe faster than you thought, given all the job activity of the last few months?
Let me pull up the latest, see if I can give you an exact number. I will say that, usually in the first week of January, we see a pretty big jump in applications in Minnesota as folks kind of post-holiday in the winter months will apply. And we didn't see as big of a jump this January as we might have otherwise expected. The latest number of weekly benefit requests, I'm just seeing these numbers now, for the week ending in January 15th were 84,561 Minnesotans. So that's the number of Minnesotans pulling down benefits. It's actually went down from the week before where it was at 89,000. So, we had thought it might top six figures again at the flip of the year, just again, given kind of the seasonal trends, but we did not see that. So we're hoping for continued decrease in those numbers. And of course, that will naturally happen with seasonality, but we hope it also continues to go down based on the recovery of our state.
And does that fund usually naturally replenish itself at some point? I mean, is there an equilibrium when there's fewer draws on it and more people on payrolls? And I guess what I'm getting at is where does it stand heading into a legislative session where that fund is a key agenda item?
Yeah, no, it's a good question. So the broader question around the UI Trust Fund is related, of course, to how many people are pulling down benefits. The more folks that pull down, the more that's depleted from the trust fund. But of course, taxes are the thing that hold that steady. The trust fund right now has a negative balance of $1.2 billion. And you'll hear the governor address this a little bit later today in a press conference on the budget and looking into this session on how he's viewing this moment and what needs to be done. But the natural state of affairs, if we don't do anything on the UI Trust Fund, is that taxes go up on employers to, over time, make up that deficit so that we can pay back the federal government and then bring the trust fund to a space where it's solvent again, and then the taxes would ratchet back down. So it's meant to increase in a way that is not debilitating for employers, but we know it's also been a really challenging year for businesses across Minnesota, particularly small businesses. So more on that later today from the governor, but you're right that the stronger the economy looks, the better the trust fund can get because there's fewer folks drawn down from it. Other questions? Great. Well, I know we're at time. Thank you, Oriana, again, for your leadership and this conversation today. And welcome again to Angelina, to our team. And thank you to all the reporters here for covering this moment from Minnesota. Be sure to tune in at 2 p.m. today for the governor's press conference on the economy. And have a great rest of your day. We'll see everybody.